Welcome back, everybody. Sive is here with ForexPeaceArmy.com. Let's take a look again on the euro currency. Two subjects for today's video. First is a brief look at our report that we have created today, and as usual I put the link down below the video. There we have considered a couple of big subjects that we had last week, or this week still. Anyway, first is the Bank of Japan rate decision, where we're trying to take the wide outlook for this decision. What does it mean in general for the markets? What consequences might be for the European Union, Great Britain, United States, and in general for developed markets? And why this is not a question about the particular level of the rate. It just explains why the market has reacted as they reacted. So despite the rate has been changed, yen has dropped still. This is understandable if you take in consideration the parameters of the Japanese economy. With the inflation rate, it's around 3%, and how really hard Bank of Japan makes a decision, feeling the pressure from its banking system for the debt burden concerning rate hike. So currently, normal rate for Japan economy has to be somewhere around 2%, maybe even higher, 2.5. This is more or less optimal terminal rate for now. But we have just 75 basis points, and it's definitely low. And that makes impacts on overall market reaction. But it's not the major subject. Major subject stands in the consequences of this decision, which we're trying to express and explain in our report. Second is we briefly have taken a look at recent United States statistics, because not everybody understands what really has happened and what's going on with the drop of the CPI numbers. So we have how to treat particularly the recent data on a payrolls report, and why actually if payroll shows more or less positive numbers, we see the drop of initial claims, why they actually unemployment is rising, what's going on, especially if we have the more or less positive jolts. So taking it all together, we're trying to explain this one as well. What is really as a just base decision for the United States economy, we see more and more signs of the deflation, which is of course not very good. It's bringing the direct hazard for the bubble on the stock market, because consumption is dropping. The wealth of the households will start decreasing, and demand will start decreasing, and that could trigger the deflationary spiral, which is definitely will blow the stock market bubble in a long-term perspective. These two major subjects that we have considered. So if you're interested with the details, what it means for the euro currency in particular, what forecasts exist currently for the euro, you could read the report. Now let's take a look on the tactical questions, what we're going to do in the next week. Next week will be short due to coming to Christmas. I do not know what activity will be, but just for Monday, let's discuss interesting topic. As I said last week, I already have started the announcement of this pattern on Thursday, and you could see that we've got it. This is bearish grabber on the weekly chart that totally changed the background of the trading. So by this pattern, it means that we need to consider taking short position. Its target will be somewhere around 1470 lows. It's minimum target. I'm not speaking about downside breakout. Obviously, this kind of action might happen only with some big background. Some news should be released. I don't know what it will be. New Fed chairman appointment, or it will be starting war with Venezuela, or something else of this kind. But this has to be big impact, because statistics that we have, data that we have, background, it doesn't suggest this type of action. It has to be something external probably, or this pattern has to fail. That's only one option here exists. But since it has been formed and it exists in all other cross-market charts, so we have the same on the dollar index, on the futures of the euro currency, this is a real grabber. So with this pattern, the theory suggests that we need to consider taking short position with the stop somewhere above the stop. That's the conclusion that we have from the weekly. But the problem is that on the daily chart we have the opposite pattern, which suggests that the market has to move higher, and the same pattern we have on the dollar index. On the euro currency futures, we do not have it. Futures doesn't confirm it. So here we have to ask two questions. First, could these patterns work together? And second, whether this grabber is reliable in general. On the first subject, I would say yes, because the target of this pattern, at least minimum target, stands right here. This is nearest top to the grabber. And Jordan-Napoli framework suggests that the minimum target of the grabber is a top, local top that stands closest to the left. Not this one, but this one. So theoretically, we could suggest that here will be some pullback, market complete the grabber, weekly grabber remains intact, and everything starts moving down. That's quite probable. Second question is how reliable this pattern. That is really a good question, because if you take a look at the 4-time frame chart, you could see what has happened on Friday. We considered two targets, if you remember in our video. That was reaction on the first target. So take a look. Market touched COP, shows minor pullback, forming doji on the 4-time frame chart. And then you could see that it has chosen the direction, because after doji, market immediately start dropping and close below the lows of the doji. It means the market is start moving lower. What the problem? The problem is, in fact, this was a Friday, and market could just get the lack of timing to keep going lower. And it was interrupted at this moment when the just broker closed the session. That's it. And that's why the grabber has appeared. If we suggest that we are not on Friday, but say on Thursday, it easily might be downside continuation. So that's what's really raising some questions concerning this grabber. Correspondingly, what we're going to do in the current circumstance. Personally, guys, I do not want to change our plan. Despite that we have the weekly grabber, this is big pattern, and it's really a long journey right back down to these lows if it starts working, right? Anyway, we're planning to get the pullback from the 1670 to 1680 area, right? So we have confidence, we have the OP, we have more or less solid upside tendency. So at first reversal downside action, we could get some kind of the gutless triple to buy. Anyway, pullback here might happen. So I think that we should not change this plan and just keep going with it. If grabber starts working earlier, that's fine. We will not get the pullback from here. Market will start moving higher. Once the C point will be taken out with some pullback, we will decide what to do with the weekly grabber. Whether it will make sense to take position with on the bearish side around 1780. Maybe we will just get the good price for taking position with the weekly pattern. If everything will go as we suggested, with this ABCD down, market completes the OP, first we will consider local scalp trade on the long side just to get minor bounce. This is not for upper continuation since we have big bearish pattern on the weekly chart, but we could use it to get better pricing, better possession, to consider short entry later. And the first touch probably here might be the pullback. That's been said, as a bottom line, I think that our trading plan remains intact. Keep watching for a 1670 to 1680 area. Let's see what will happen there on Monday, if market will get there, and make a decision on a long entry. Second stage of our plan, once this pullback will be over, we will make a decision on a short entry. I'm not sure that will be next week. Maybe due to the holidays, we postpone this on the week after Christmas. That's the first scenario. And second scenario, if market starts upward action immediately on Monday and daily grabber still starts working, where miss and just skip the first stage and directly turning to the second stage. So once the pullback will be over, we once again will make a decision on a short entry. That's, as you understand, very simple. So let's see how it will go.